Hi, Tim Bigham back for Delta Derivatives, Option Hedges and Edges, powered by the best option scanning tools on the market today, rbtrader.com. Looking at a market that just continues to defy gravity, powering higher. We've had the worst down day was yesterday post-Trump victory. We are down about 20 basis points on the market, so this has become a rally unlike really any other. We are getting to stretch valuations, obviously. Went to 2 times price and sales on the S&P 500 for the first time basically since the NASDAQ mania of the late 90s, early 2000s. So we're looking at a market that is getting a little frothy from a valuation perspective. But for momentum, guys, we just keep going up until we stop going up. Be interesting to see what will staunch the rally. We're starting to see a little crack, so the steel stocks, which had led the charge higher, starting to fall here. Last I looked, steel stocks were down on the day. Those kind of, got way out over their skis. Oil also, after railing big time yesterday on a kind of new OPEC agreement, right, is actually a little bit lower again today. So we're seeing, that big rally from yesterday pre-open really come back down to earth. So I think at some point we're going to see the market probably trim back some of these gains. When, who knows? Until then, right, we have the Fed meeting coming tomorrow with the announcement. I think 25 basis points absolutely baked into the cake. I think it'll be a one and done too. They'll probably jawbone that, rates are going to go higher, data dependent, economic conditions, blah, 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 right? But I don't envision a rate hike anytime in 2017, given how strong the dollar is and how comparatively strong we are compared to the rest of the world. And, remember the backdrop of this rally was, the Italian banks starting to really show signs of fatigue. Their number one bank basically had a pseudo bailout this morning, and that was met with big rejoicement. So the fact that things are starting to crack gives more reason for the rally, a little counterintuitive. I would nibble on some puts up here, but certainly up until now, buying puts has been nothing but a disaster. So using those arbitrator option scanning tools, a couple trades that I really like here. Big call flow on December options that expire this Friday. First one on Arconic, ARNC, a big buyer of the December 22.5 calls. I sold those, bought the Januaries as a simple calendar as a hedge, captured almost a 20-point term structure volatility edge. This thing had been flat before the big buyer coming in. Got a investor basically meeting today after the close for Arconic, but that was already in the card. So certainly anytime they keep the meeting, that probably means that no big news is coming. Another one is Campbell Soups, CPB. Again, huge volume, December 60 calls expiring this Friday. Sold those, bought the Januaries, bought a few more Januaries to give myself a little more upside. But some of the names in the food space, Kellogg, ConAgra, also showing some big unusual call volume. So I think that sector may be back in play. So until we get through the Fed meeting and see what happens with this rally, I think stay nimble. And for investors versus traders, two different things. As an investor, you remember you're buying very expensive stocks. As a trader, be ready to exit if you're going to jump on that Trump train. So until next time, as always, here's a good trading. Take care.